This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. It is a Fed Wednesday for a couple of reasons. It is, of course, July 15, 2026. Carol Massar along with Tim Stenivek.
Hi, happy middle of July. Hot enough for you?
I haven't been outside since I walked in this morning.
All right, well, we'll be talking about the weather in our 4 o'clock hour a little bit.
It's definitely on our mind, and so is the air quality, to give you a little hint of what's to come. Hey, in terms of it being a Fed Wednesday, Fed Chair Kevin Warsh up on Capitol Hill for a second day, his semi-annual testimony before lawmakers. We're also awaiting the release, crossing any moment now, the Fed's Beige book. I bet you are glued to the Fed's website. I'm
glued to the Fed's website. I'm glued to the terminal. And I'm not seeing anything yet, but it does come just a little after 2 o'clock. We are going to bring you that as soon as we get it. And Mike McKee is going to be joining us for some details and analysis on that. He's out there in Idaho. So we're looking forward to talking to him.
Yeah, we certainly are, in terms of what he's hearing on the ground. Some analysis from him, too, on another read on inflation. We got the PPI this morning. Also coming up on the trade, Ann Bartels is back with us. She's Chief Investment Strategist at Sanctuary Wealth. She's going to get into why tech remains the secular bull market sector. She's going to talk earnings backdrop. She likes semiconductors, or points out how they are providing the momentum.
Also, OpenAI, fresh off a lawsuit from Apple accusing it of stealing trade secrets, moving forward with its first device. Mark Gurman's going to be stopping by in just a minute.
Talk about timing.
Yeah, he's got the details on this. A Bloomberg exclusive. Very cool.
He does. We've also going to get a read on the consumer, the bar and pub space, and the World Cup. We're going to do that with someone who has been in the food service industry, really equipment we're talking about. We're going to talk with the president of SilverChef US, John Jacobs, will be with us.
All right, got some Beige book headlines coming across the Bloomberg terminal and on the Fed's website, too. Economic activity increased at a slight to moderate pace in 11 of 12 Federal Reserve districts in late May and June. Well, one district reported no change. The pace of growth was quite close to that of last period, when activity expanded in 10 districts, was flat in one and down in one. Here's an interesting one, Carol. Consumer spending edged up as higher prices, particularly for fuel, dampened sales in other categories. So people spending more on gas, meaning they're spending less on other things. Several districts noted declines in spending on discretionary items or trading down to more affordable varieties. Tourism was up, with some districts receiving a boost from World Cup visitors, and auto dealers reported little change in sales, but spending on repairs grew as consumers held onto vehicles for longer.
Interesting. Remember, it's anecdotal evidence, if you will, snapshot of economic conditions across the 12 Fed districts. So we're going to dig into what Tim just read and get some analysis with our Mike McKee in just a moment. We do want to get you caught up, though, on the market trade on this Wednesday as well. We've seen stocks definitely bounce off their lows of the session. Still down, though, a little bit on the NASDAQ 100. Over to Charlie Pellet we go.
Hi, thank you very much. And here's what's going on, Carol and Tim. Lots of moving parts to this market today, and I got you covered with the S&P right now up 26, 75.69 where we stand. That is a gain of just about 0.3%. Dow Industrials up 164 points. That is a gain there of 0.3%. While NASDAQ higher by 156 points, up 0.6%. But tech stocks, the NASDAQ 100 tumbling now by 0.3%. All of this with another rout for semis. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 2.4%. 10-year with Kevin Warsh on Capitol Hill, 4.54%. The 2-year, 4.12%. Gold up $13 the ounce to $4,066, up 0.3%. And West Texas Intermediate crude WTI down 0.6%, $78.90 a barrel on WTI. Earnings news. We heard from Morgan Stanley this morning. Its stock traders set another quarterly record, $6.3 billion from equity trading. That is a 69% jump from its previous all-time high. Morgan Stanley shares up 0.8%. Rival Goldman Sachs up by 0.2%. BlackRock after earnings surging now by 5.9%. Other headlines, and Anthropic planning an IPO investor meeting as its mega listing nears. SpaceX today trading right around its IPO price, actually just above now, $136.21, but for much of the day was trading below that $135 level. And sources tell Bloomberg the Yankees are in advanced talks to raise nearly $3 billion of financing from Apollo Global Management. In the Northeast, it's hot, the air is bad, extreme heat testing power grids across much of the U.S. as air quality drops from wildfire smoke drifting in from Canada. New York City's air quality index has now deteriorated to a rating of, quote, unhealthy for everyone. Recapping, S&P up by about 0.4%. Carol and Tim, that is a Bloomberg Business Flash.
All right. Appreciate that. Charlie Pellet there. We'll come back to Charlie a little bit later on. Hey, we do want to get back to what we got in terms of the Beige book. Tim reading some of the highlights, if you will, but it is an anecdotal read from regional banks, part of the Federal Reserve, on labor markets, on prices, on economic activity.
Yeah, let's talk a little bit about prices. They did increase moderately overall. 9 districts reported moderate growth, 2 robust growth, and 1 slight growth. Compared with the last reporting period, price growth was the same or slower in all districts. On the labor market, Carol, employment rose on balance. 5 districts showed modest, moderate, or solid gains in employment. 7 districts experienced little to no change. But I think the overall economic activity is the one that I'm focused on. It does say that economic activity increased at a slight to moderate pace in 11 of 12 Federal Reserve districts in late May and in June, with 1 district reporting no change.
All right, so let's get to it, because this is coming on a day where Fed Chair Kevin Warsh was back up on Capitol Hill before the Senate Banking Committee. We also had producer prices coming in tame, showing a broad-based cooling in several key categories that have been boosted in recent months by the fallout from the war. In terms of Kevin Warsh, we just kind of want to give you a little highlight of what happened up on Capitol Hill in the nation's capital, Washington, D.C., of course. He was pressed by Democratic Senator Chris Van Hollen. Chair Warsh saying that the president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy.
Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have. Okay. I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. Okay. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
All right, that, of course, was Fed Chair Kevin Warsh up on Capitol Hill today. Let's get to it. Beige book, PPI, Kevin Warsh, Bloomberg TV and Radio international economics and policy correspondent Michael McKee. He is at the 13th annual Rocky Mountain Economic Summit. He is in Victor, Idaho as we speak. Hey, Mike, so good to have you here with us. I don't know. Should we start with Beige book? Is that what matters? Anything helpful here?
Nothing really helpful. And speaking of healthful, the air here a lot better than it is in New York City, from what I understand. The Beige book tells you a little bit about what people were thinking before July 6th. That's the closing date for this Beige book, which was prepared by the Federal Reserve Bank of Chicago. And what's interesting to me in it is that in the section on prices, they talk about businesses saying that prices are still going up in those areas. And that was about a week or so after, in theory, the memorandum of understanding started pushing oil prices down. So there's a lag, and it may be that the inflation warning in the Beige book is a little out of date. I would say it was out of date, except for the fact that now we're seeing prices rise again for energy. So we'll see what happens going forward.
Just remind us when this data set is taken, Mike.
Well, they basically collect data between the 2 Fed meetings. Now, the last Fed meeting in June was on the 17th. So between the 17th and the 6th of July is when the data were collected, and the bank was getting information from various other banks around the nation. And so as Tim was pointing out, a wide variety of them were seeing increases in prices. So the lagged effect of the war is definitely on view in this report.
The consumer spending, Mike, related to oil prices, as we mentioned, consumer spending edged up as higher prices, particularly for fuel, dampened sales in other categories. Several districts, as we noted, declines in spending on discretionary items or trading down to more affordable varieties. Is that more of the same? Is there anything new in that as with regard to discretionary spending? Is it the same stuff that we heard from the big box retailers a few months ago?
Yeah, essentially, it's the same thing that we're hearing from all the retailers and what we have been expecting to hear, that people trade down a little bit. More money goes into gasoline and less money goes into other discretionary purposes. And on Thursday, tomorrow, we get the retail sales report for June, and we'll see if that plays out. I would expect we'd see a big increase in gasoline station sales because, again, that was in June, and the lagged effects of the price increases from oil were still in the gas prices, and gas prices didn't go down as much as oil prices did. So you'll probably see that some of that tomorrow. The question is what happens going forward, and I think the July and particularly August retail reports will be more important to the Fed because that's back to school season. We'll see if people are really cutting back or if they still feel like they can keep spending.
Mike, I don't know what it is about you economic and Fed types, man, though, but when you do a summit, you're usually in some pretty cool places.
Yeah,
including
Sintra, Portugal, Victor, Idaho, Jackson Hole. What's the deal?
Like, what's up with that? Like, what's really going on there?
Oh, what's really going on here is business people and economists are coming together, and definitely not fishing. There's no fishing going on. There's no horseback riding or anything like that. It's all talk about the economy. Which actually it was. I was sitting with Paul McCulley, the former PIMCO economist, this morning at breakfast, and we were talking about Kevin Warsh, of course.
And what did he say? Just real quickly.
Well, the feeling is that Warsh has got to earn his credibility because he did say that he thought the economy could use lower rates when he was trying to get the job. And I think that's what you're seeing now. He's building his credibility with the markets. He said the markets are upset with him. I don't think that's the case. I think the markets like what they hear. And he gave them a little bit today of the sort of reaction function, saying that the Fed wants to see the growth broaden and inflation narrow. Didn't really mention any categories, but you can imagine the kind of things they're looking at.
All right, good stuff. All right, looking forward to your reporting out of that, Mike, and your interviews.
You just stay there for the next month, Mike, until Jackson Hole? Or how does that work? Or do you come back here and get some work done?
I was thinking about it. If you could stop by my desk and forward my phone, that would be great.
Okay. Noted. Done.
We are on it. All right. Bloomberg TV and Radio international economics and policy correspondent Michael McKee. He is at the 13th annual Rocky Mountain Economic Summit underway there in Idaho.
I just can't see all those Fed officials like in Vegas, you know?
No, exactly. They're never there, right? Or those big convention centers. It just doesn't come out that way. All right, folks. That is certainly your economic backdrop. Marketing and or market watchers and really investors right now, they are looking at the economy too and what we're getting in terms of Fed policy, what that means in terms of valuations and the trade.
For more on markets, back on Bloomberg, Ann Bartels, Chief Investment Strategist at Sanctuary Wealth. It's got $64 billion in assets on its platform. The firm provides tech compliance, investment research, back office services to its partner firms across more than 30 states. She joins us from New York. I want to start on where we were talking about with Mike just now and sort of the macroeconomic backdrop. What we got from the Beige book, what we heard from Fed Chair Kevin Warsh, the recent inflation and other economic data. What do you think should matter to investors the most right now?
Well, I think really what matters the most is how are second quarter earnings going to come in? What I do like what Chair Walsh has done is really set confidence in the markets that they're going to tackle inflation. And the inflation gauges of both CPI and PPI came in remarkably below expectations. So I think setting a positive tone on inflation gauges easing up, we can really now focus on earnings. First quarter earnings came in almost up 30% year on year. It's possible we have another quarter where we get close to 30% growth. A lot of that being driven by the tech sector, but having a strong backdrop for the economy, the consumer's doing well, spending is going up in all phases or all areas of the consumer, high, low, and middle are all rising with a big uptick in the low-end consumer. I mean, this really feels like we're still sitting in Goldilocks land.
So you were on a little less than a month ago, Marianne. S&P 500 is up about 2.5% since then. I think this was like kind of late June. SOX is down 9.6%. Bloomberg Mag 7 is up 9%. NASDAQ 100 is kind of flat. Outperforming major industry groups in the S&P 500 are communication stocks, financials, healthcare, consumer discretionary, and energy. What's changed since we talked in late June in terms of market leaders and fundamentals, especially as we now are kicking off earnings? Have the earnings estimates been rising for a lot of groups, or just technology, or what?
Well, there's big upgrades happening within technology, but energy actually is the sector that's supposed to produce the best earnings in the quarter. And I'm not hearing a lot of people talk about that. And I know a lot of strategists lowered their oil prices when we thought that there was a good ceasefire, but we've seen oil prices firm. So I'm really going to be paying attention to what's happening in the energy sector. What's happening within the market overall is we're getting a lot of sector rotation. So we did get a correction in the Mag 7. They look like they've bottomed and they're rallying. Semiconductors have been strong leaders, but I do think that they're at risk of correcting. And when they correct, they can correct pretty sharply, somewhere in the range of 30 to 50%. And when we saw them correct in the mid 1990s, that was the range that they corrected and resumed their uptrend. I'm not a big fan of healthcare. I know there's been some defensive money moving there. I do like biotech. Don't like the consumer staples at all. I don't really feel that they have good pricing in there. And when we look at communication services, I like that area because I'm really a big fan of Alphabet. And, Meta may have bottomed, but you do have part of the Mag 7 in comm services.
Did you get anything from Kevin Warsh's testimony today with regard to AI or the Mag 7 that is of interest to you? I mean, what stuck out to me is he says in the near term, I think AI investment is good for jobs. He said that if AI firms disappoint investors, capital would dry up. He says the surge in valuations of AI companies is notable. He had some interesting commentary too about the way that college grads right now have the tools, he thinks, to succeed in a world with AI. Since you do follow tech so closely, I'm just curious what you think about what he said.
Yeah, I think the things that you just brought up about the jobs and AI, I think there's been a lot of fear that we're going to lose jobs. And we've even written the surprises probably that we're going to create jobs. When we've looked at major technological advancements in our economy, they haven't taken away jobs. They've always created fear that it would take away jobs, but in fact, they actually create jobs. And they probably are going to create some jobs that have never existed before. And this is something that we're still kind of learning. So I think that, AI is going to be transformative. We just put out our mid-year report, but as I was writing on technology, there was so much to talk about. I actually wrote a separate report just on technology because it is the major driver. It's the biggest leap in technology, we think, since the 1700s when we created the steam engine. I know there's a lot of talk relative to the railroads, and there is good comparison, especially in terms of the capital intensity that's needed for the build out in AI.
Marianne, just got 25 seconds. Semiconductors and the big like Mag 7, just quickly, all of that you like? Or you think has opportunity?
From a leadership standpoint, they're still the leaders. But if I had to buy today, I think you're getting better value in the Mag 7. I am looking for a correction in semis, but I would be a buyer on that correction.
All right, great stuff. Really appreciate it. Ann Bartels, she's Chief Investment Strategist at Sanctuary Wealth. They've got $64 billion in assets on their platform, joining us right here in New York City. Coming up next, OpenAI just off a lawsuit from Apple accusing it of stealing trade secrets. It's moving toward its first device.
Yeah, Mark Gurman has the Bloomberg exclusive. He's going to stop by in just a few minutes. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg PPI Wednesday. And this morning we got a report showing softer than anticipated inflation. That is driving stocks and bonds higher for the most part. S&P up 27 now to 75.71. That is a gain of 0.4%. Dow Industrials up 133 points. The Dow up by 0.3%. NASDAQ is up 0.7%, but a tough day for a lot of big tech names. The NASDAQ 100 index down 0.2%. Interestingly, though, we're seeing semiconductors hit hard today, with the Mag 7 index now advancing by 2.3%. The SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 2.3%. All of this with a VIX below 16 and a 10-year at 4.54%, the 2-year 4.12%. Gold is up $18 the ounce. Spot gold at $4,071, up by about 0.5%. West Texas Intermediate crude just about flat on the day, below 80 on WTI, 79.31 a barrel. Brent, the global benchmark, below 85 at 84.72 a barrel. Sources tell Bloomberg the payment processing firm Stripe and private equity firm Advent International have offered to buy fintech pioneer PayPal Holdings for more than $50 billion. PayPal shares, they're surging now by 16.8%. Briefly, Anthropic plans IPO investor meetings as its mega listing nears. SpaceX now trading slightly above $135. That was the IPO price. Right now, it is at $135.91. Did spend much of the morning below $135. And the Yankees are said to be in talks for $3 billion in financing from Apollo. Recapping, S&P 500 index up 29 now, up by about 0.4%. Carol and Tim, that is your Bloomberg Business Flash.
All right, everybody, we want to get to a Bloomberg exclusive. Bloomberg's Mark Gurman reporting AI darling OpenAI's first device will be a human-like AI companion of sorts in the form of a mobile screen-free smart speaker.
Am I getting flashbacks to
what?
Alexa first being announced by Amazon?
Maybe.
I don't know. Let's ask Mark Gurman.
Yeah.
He reported this exclusively. He's Bloomberg News managing editor for Global Consumer Tech. He joins us here in the studio. Interestingly, and you noted this in your piece, Sonos shares took a dive when
Sonos shares took a
published
dive,
this.
yeah, because if you think about it, all they do is smart speakers and smart home stuff, and it's all very commoditized. And this OpenAI device is going to blow the Sonos device out of the water for AI purposes. I'd be shocked if they came anywhere close to Sonos from an audio quality standpoint. So they really are distinct products from that standpoint. But you're right. This is like the original Alexa pitch 12 years ago, really brought to life for the first time.
How is it brought to life?
Well,
or how will it be brought to life, according to your reporting?
They see the smart speaker as a new type of computer. They call it an AI computer, the first computer built for the AI era. It's kind of ridiculous, but no screen, speaker, you talk to it, and they see it as a companion in your home. So it can listen, it can learn about you over time, you can have back and forth conversations, and it really gets to know you and your personal data based on what you've hooked up to ChatGPT, and it becomes a better companion over time as it learns more about you, being able to chime in actually during live conversations. So it's like another human in your home.
Have you played with it?
No.
Oh, okay.
I wish.
Well, so when is it coming? This is just them saying that it does all this?
No, we're breaking news on this.
Okay.
So they're not commenting on this.
Okay.
To be clear, when is it coming? Well, they hope to introduce it this year and roll it out next year. But obviously the Apple lawsuit, as we talked about the other day, that's a big overhang. And so at this point, while this is the plan, they're going through forensic sweeps and trying to understand what the trademark or the trade secret situation is within OpenAI to see if this is something that's going to get delayed or have an impact on this first product launch.
Are Johnny Ive's fingerprints all over it?
His fingerprints are all over it. So Love From has a lot of former Apple designers on staff. And if you look back at the history of Apple, what these people are known to do is help people connect with technology, making technology feel personal, making technology feel more alive and emotive. And that's the deal with this smart speaker. It's the first smart speaker that feels like it was designed by Johnny Ive and very emotive. Obviously, Apple's got the HomePod.
Yeah.
But that thing is hot garbage. It's not a great product. This will be different.
I mean, does everybody have to be worried about
Mark
OpenAI?
because he's subtle.
I know.
Yeah.
If you would just tell us more, Mark. No, but I mean, so does everybody have to be worried about what they've got? Because it sounds like it can blow everybody away.
Yeah, I think that Apple should be worried about what they've got.
Google, should they be worried?
Google should be worried. But the real secret sauce here is the AI models. And at some point, though, these are all going to get commoditized, and everyone will be in the same place, right? I mean,
meaning like Claude will be the same as ChatGPT.
Yeah, like at some
it will be
point,
the same as Llama.
Yeah, ChatGPT is way ahead of everyone else right now in terms of these voice interactions. If you've tried GPT Live, the new voice system they rolled out last week, it's excellent. Yeah. You can hold back and forth conversations. It can interrupt you. It can listen and talk at the same time. Very advanced tech. Others will catch up with them eventually. So that's really the secret sauce is the AI models, and they have great designers. But Apple's got great designers. Google has great designers. So, others will be able to catch up in this space too. And Apple, for its part, is about to roll out a bunch of smart home appliances too.
Can we talk Siri? Because we were talking about before we got going. I thought I heard you on Surveillance with Tom and Paul saying that you've been playing with the new AI stuff on Apple, and you.
That wasn't me. No, I'm joking. It was me.
I might not have had all my coffee in the morning when I heard it.
The Siri AI is very competent. That's what I would say. They're going from.
I've worked with people who are very competent, and they're not always my faves.
Like Tim?
No,
I'm joking.
Yeah. Tim is way above competency.
Go back to LA.
So Tim is like ChatGPT.
Yeah.
Okay.
Oh, thank you.
And someone who's competent is like Siri AI, and someone who shouldn't be here is like the old Siri. Okay.
Okay.
So that's the difference. You're not anywhere near ChatGPT, but Siri's going to do everything you throw at it and ask for it. It's just not going to do it as well as Tim over here.
Yeah. On what pieces of hardware?
The Siri AI?
Yeah.
Well, I've used it on everything.
No, but like, will it work on old phones? Will it work well on old phones?
It's supposed to work on the 15 Pro and up. Probably works fine on the 15 Pro and up. Some of the newer features, there's some features like with the voice, you can change the voice expressiveness. Those require the newer models and more RAM that you can get on the 16s the 17s and the Air and newer.
I think I can't remember what question I asked. It was like such a base. I think actually it was, I asked Siri the other day, when is the next Fed meeting? And it was like, it said, here's what Siri said to me. There's nothing in your calendar like that.
All right, so
that is the most.
Let's try it.
Was it in your calendar?
When is the next Fed meeting? I've got the new Siri. The next Federal Reserve meeting is scheduled for July 28th to 29, 2026.
So it doesn't work on my old iPhone, but it works on your new one.
But that's why I say it's competent. You would expect Siri to be able to answer those questions. Now it can answer those questions, but it's not going to help you do extensive travel planning, extensive research programs, and whatnot, or creating things at the degree you can create and generate with ChatGPT. But I will say the image gen on the new Siri is pretty darn good now.
What's the platform they're using to do that?
So the models are Apple models, but they've sort of opened the hood, and you've got a lot of Gemini technology in there. So same as the new Siri.
Okay.
Okay. So is everybody going to now, Mark, look at OpenAI when it comes to device innovation? Has Apple kind of lost its edge here?
I don't think Apple's lost its edge.
Okay.
But I do think ChatGPT, OpenAI have the unique opportunity, at least in the short term, of combining top-tier models with top-tier engineering and top-tier design. But I think the bar to replace Apple and the bar to replace the iPhone is sky high. And don't forget the lawsuit.
Well, that's what I want. Yeah, go.
Like I said, you'd be nuts to leave Apple for OpenAI after reading that lawsuit and as an employee. And don't get me wrong. They're sending that lawsuit around to all the employees internally so they know this is what's going on. You don't want to do this. They don't want to lose more people to OpenAI, and I think that's part of why they're doing it.
But these devices that OpenAI is starting to roll out, are they at risk depending on how this lawsuit plays out? I know you've talked about how this lawsuit is a warning.
Well, no, there can be an injunction out of this. They could be halted by the courts. Apple could get the ITC involved. That's the International Trade Commission. If Apple finds trade secrets of theirs in these products, they're going to go to war against OpenAI. This is just a small battle right now.
We're speaking with Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech. He joins us here in the Bloomberg Businessweek
You want to talk
studio.
about this picture, right? They're so chummy.
We've had that
Johnny
picture for a while. I just love it.
Sam Altman,
the two of them.
That's their press shot, the two of them. It's a big partnership. I mean, you're combining like the best AI guy. Arguably, people have a lot of thoughts on Sam Altman, but it's hard to argue with the tech. So you're partnering with the CEO of the best AI tech with like the best designer of his generation.
And yet, I still have the question, is this a device that people are going to want? 12 years ago, we saw that first video for Alexa from Amazon, and people were like, this is not something that people are going to adopt. We think this is not going to work. Amazon stunned everybody, and everybody adopted the Amazon Echo devices, and the rest is history.
I think the difference between 2014 when the Alexa was announced and 2026 or 27 when this is going to be announced, people are scared of AI.
Yeah.
Okay.
Do you want this in your home? I don't know.
You know enough about AI to know that you could be a little afraid of it. 12 years ago, it was so novel and nascent. No one's ever heard about it before. You couldn't really be afraid of it. People are into privacy now. Right? Mm-hmm. People see the ads that Apple has against Meta and whatnot. People are into this stuff now, whereas 12 years ago, they didn't think about it. So the bar's a little higher.
I mean, an always listening AI device.
It's not always listening. It's not going to listen at all times, but it will have sensors and cameras to get context throughout the day.
I have a mixed love affair. Like, we have Google Home, and there are things that I love just kind of asking it. And then there are times I'm like, I don't love that I'm yelling at or talking constantly, but it does sound like we're changing. I want to go to Apple for a moment, just because when you were on with Tom and Paul, you were super excited about Apple products that are coming our way.
Yeah, there's a lot. There's a lot.
Yeah.
I'm going to have to take my wallet, put it in a drawer, lock it, and throw the key out, because there's a ton of stuff coming. You've never seen anything like this. This is going to be the most prolific period of new products in Apple's history.
Starting in September?
Starting in September.
What are we going to get?
In September? Well, what can I talk about? The new iPhones. Obviously the 18 Pro Max, kind of whatever. The iPhone Ultra. That's what I'm calling the foldable phone. I'm so excited. I wanted a foldable phone for so long, but I just don't want to leave iMessage or the Apple ecosystem or iOS. Now I won't have to. It's going to be expensive, but I can't wait. Just getting that screen real estate to pop that thing open, multitask. It's going to be, I just love being productive on the go. So I'm excited as a tech nerd. There'll be more stuff.
There'll be more stuff.
Next year, the Foldable 2. Next year, the 20th anniversary iPhone.
What about some wearable health tech that's not the Apple Watch? There's been discussion of maybe a Ring or a smart band.
They've looked at, well, neither soon, but they've looked at smart glasses and how they can integrate health into the smart glasses.
Okay.
I'm not sure that's going to be there in Gen 1, but something they've definitely looked at.
Is there any health in AirPods right now?
There's the heart rate.
Okay.
But
that's the extent of it.
It's the extent of it. No, there's also the hearing aid.
That's right. Yep.
But the heart rate on the AirPods is worthless if you're wearing an Apple Watch. So who it's really good for are people who work out without an Apple Watch. And so it's kind of cool where it's like, if you don't want to wear an Apple Watch, you can get all that data from the ears.
Hey, just got about 40 seconds real quick. Apple received government approval to roll out Apple Intelligence in China. Big deal, real quickly.
China is it's a hypermarket. It's the most competitive smartphone market. Apple has been leaving users behind there without their AI features. If it's the first gen Apple Intelligence, it's kind of worthless because those features don't work. The real meat and potatoes will be when they get approval for Siri AI and the new Apple Intelligence in China, because like we talked about a few minutes ago, that's really good.
All right.
Our daily dose of Mark Gurman. I love it. We love having you in New York, Mark.
It's so much
Thank you.
fun. Just commute back and forth.
Yeah, sure. Okay. Every week.
Especially when the weather's like this, he doesn't miss LA.
Well, I saw there was like a warning, like don't go outside. The air quality.
I know.
What does that even mean? Yeah. Is there something going on?
It's
wildfires far away.
Yeah, coming down from Canada. Mark Gurman, he's Bloomberg News managing editor for Global Consumer Tech. AI maybe can fix that. Maybe?
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and stocks continue to push higher. This as inflation data from this morning. The PPI report is outweighing a rout in chip names. Got to begin with what is going on with semiconductors. Looking at the stocks right now, Philadelphia Stock Exchange Semiconductor Index, it is down 2.6%. It is helping send the NASDAQ 100 index down by 0.3%. But ex semiconductors, we're looking at a market moving higher. S&P up 26 now, 75.70. It is up by about 0.4%. Dow Industrials up 170, up 0.3%. NASDAQ higher by 0.6%. All of this with the Mag 7 index rallying now by 2.3%. Again, the SOX down by 2.6%. The 10-year on a PPI Wednesday, 10-year yield 3.54%. The 2-year 4.12%. Gold up $17 the ounce to $4,069. That is a gain of of 0.4%. Crude now at $79.88 a barrel, up 0.7. Talking about WTI, barrel of Brent back above 85 at 85.18. Brent crude up by 0.5%. Apple shares are rallying now by 4.1%. Apple has received Chinese government approval to roll out Apple Intelligence in China. SpaceX right around its IPO price, $135.37, spent much of the day trading below $135. Right now we're looking at SpaceX down by 0.5%. And Anthropic is planning IPO investor meetings as its mega listing nears. Also, the Yankees said to be in talks for $3 billion in financing from Apollo. Recapping, S&P up by 0.4%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massler along with Tim Stanovic live here at Bloomberg headquarters in New York City. Hard to believe that the World Cup wraps up this weekend.
I know everybody should be watching our program starting in 18 minutes. But I think some people will be watching the semifinals of the World Cup with Argentina.
One of our
and England
producers,
today.
Sebastian, who's from Colombia, man, he every time it comes in, he's got some little great factoid or an update on.
He's working today. He will not be watching the World Cup. He will be working the whole time.
He's a multitasker. Can I just put that out there? He
does
both, everything, all well. All right, so we're saying it's wrapping up this weekend, which is hard to believe.
Did you see the Beige book actually had some data about tourism related to the World
what
Cup?
did it say?
They said some districts report an increase in tourism as a result of the World Cup.
I love that you went there because back in early June, we actually reported out here at Bloomberg that strong hiring in leisure and hospitality helped fuel a surge in hiring in the U.S. and Canada. That was for the month of May, so it was kind of leading up to the World Cup. They talked about boosted by hiring at restaurants, bars, and hotels. The U.S. hospitality industry added the most jobs in more than 3 years in May, according to government data. Canada also saw a jump in employment, driven in part by strong hiring in the sector. That was according to a separate report. The point is, though, also, many experts and watchers said the gains are probably going to be fleeting. It's because of the World Cup.
Yeah, we'll see what John Jacobs has to say about this. He's president of U.S. operations at SilverChef. It's operating in 4 countries, the U.S., Australia, New Zealand, Canada. About 100,000 customers globally, founded back in 1986. What they do is provide flexible restaurant equipment financing for things like stoves, fans, refrigerators, and more. John joins us from Atlanta. John, just tell us what you're seeing with your business, what you do for restaurants in bars, pubs, and how that's changed in anticipation of and during the World Cup.
Well, first, thank you for having me today. And the change has been dramatic. As we start to look at the growth and the pickup of the hospitality industry as a whole, the restaurant owners, independent restaurant owners specifically, have had this option. They needed to upskill. And that's not just in equipment, but also in staffing and point of sale materials, marketing, and everything else. And it all costs dollars. And the ability to do this in advance. Hospitality has always been one of the leading industries. And to be able to have the World Cup as an event that helps jumpstart the economy this summer has been fantastic. So SilverChef's been able to help us as we go forward in this industry because our flexible financing has provided the opportunity to move with the restaurant market. What do I mean by that? This isn't just a one-time event. As a restaurant owner needs to look at preserving cash or to spend in advance of the event, we're here to help. But we're also here to help and provide that flexible opportunity, meaning today you needed an ice cream machine. Tomorrow, as the world changes, as we get past this World Cup event, as we head into maybe even the 2028 Olympics, you can change with your constituents and their needs and their ask.
So, John, when these guys, and I think you make a really good point. I mean, we've had John Tapper on tons of times here to talk about bars. I mean, bars, restaurants, it's a really tough business, slim margins, certainly when it comes to restaurants. And there's the failure rate. We all know the stories that have been talked about by that. For these folks that you work with, so you're really providing them a financial lifeline to be able to meet their needs, their demands, build out their business. So when they do something, is it often they're renting or what percentage actually rent to own ultimately? Or is it just that they rent it for, an uptick in demand, if you will, like something for the World Cup?
So that's a great question. It could be rented for the World Cup, but it is a 12-month weekly payment. So there is a portion of the payments that go toward equity. 60% of every payment made goes toward equity in there. We allow a restaurant owner to buy the equipment at any point in time using the equity that's built into it. There are end of term options. Once we go past 52 weeks, there's a loyalty program that we can put you on, or you can continue month to month with the same payment. But the biggest advantage is the flexibility, right? And that's, in this industry, in finance, nobody wants the asset back. But what we do is we say, it's cool. I want it back. Give it back to me. Let me help you grow. Today, you need a single door fridge. Tomorrow, you've grown, you need a 2-door fridge. We take that single door fridge back and allow you to put a 2-door fridge on a new contract and move forward. It is a remarkable concept.
You've got a great, because you're active in these different countries and you have so many customers, you have a great view on what's happening in certain regions of the world, certain parts of this country. What's hot and what's not in the U.S. right now?
Well, excluding the World Cup, which has been very hot in most markets, and not just in those host cities, but in cities that have been able to have watch parties in support of different countries. There's a lot going on. Now, I will preface this by saying that the U.S. and Canada has gone through this period of both economic question and also heat, and heat being one of the biggest issues for the summer. Most people don't want to go out, and economic disparity coming to the use of disposable income. But the growth has been in family style opportunities. People still have a little bit of this COVID hangover, and they want to go out and they want to meet. And that's what's been the beauty of the World Cup, because you go out and you support your team, regardless of what team that is. And we're all marching at the same drum. We're all paying attention to it. We're all there. You can walk to anybody in the event, whether it's at a bar or a restaurant or any other hospitality function, and be in a family environment. We're humans. We want to be.
No, totally get it. And we've been talking about it too. It's been fun walking just in and around New York City, and just even outside of the city, just the community feel of people at restaurants, bars, watching games together. It's been a kind of a pretty cool thing to see. Having said that, though, you could be and are a great read on the economy through small business. And just got about 40 seconds left here, John. How would you describe, you've seen different cycles, your company's been around for a while. How would you describe the market for the restaurant community right now and small business, real quickly?
The restaurant community in the U.S. right now is experiencing a period of what I would consider dormant growth. What we're looking at is everybody is scaling up. Now, what they're scaling up to may be 3 months or 6 months down the road, but people are starting to put their capital at work. Now, the advantage, again, with SilverChef is they can keep the capital in their business specifically, and we provide the financing to move forward. But there is this level of growth that everybody is ramping up to. The one thing that I hear from the kitchen equipment dealers more often than not is they are spending a lot of time generating opportunities and quotes for businesses to move forward.
All right, interesting stuff. Definitely a cool take, certainly on small business, on restaurants, and on the World Cup. John Jacobs, thank you so much. President of U.S. Operations at SilverChef. Joining us from Atlanta.
Hey, coming up next on Bloomberg Businessweek Daily, we got stocks on the move with the S&P 500 up 0.3%, the NASDAQ Composite up 0.4%, the Dow up 0.2%.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, if you're just joining us, we're getting ready for the last hour of trade on this Wednesday. Carol Massar, Tim Stenovec, live here in our Bloomberg headquarters in New York City, bouncing around here on the equity trade. Little change, not even up 0.2% on the S&P, a gain of about 13 points. Dow is up about 100, 0.2% move to the upside. And the NASDAQ 100 slightly lower, down 173 points. That's good for a decline of about 0.6%. It feels to me like a meh trade.
Well, I mean, it's less meh than it was earlier today when the indices were when the indexes were completely flat.
Meh?
Yeah. Okay. I mean, but what do you want in July?
I know. I also
You know, a lot of people are out of town when there are a lot of parking spots in Brooklyn.
it's so true. Or commuting, you can actually get a seat. It's really sweet.
Energy's down about 1% in terms of industry groups. Utilities, information technology, and industrials are lower. Communication services is leading the pack in the S&P 500, up 2.5%. Consumer discretionary up 1.4%.
I feel like my new indicator of markets, or just like something wacky, is the SOX. The SOX is just up about 0.2%.
It is?
Oh, did I have the wrong thing?
Well, it was lower earlier.
Wait, maybe I came up with the wrong ticker. Oh, I'm sorry. It's down 3%. My fingers didn't do the walking correctly, apparently, on the Bloomberg. Yeah, it's been down 5%, still down about 3%.
Okay.
Yeah.
Cool. Just making sure. It's my first decliner, so.
Yeah. Okay.
Yeah.
Your heart went a little fast.
It's going to be okay. Just find a new one.
Tim,
but
it is going
to be okay. That's what.
All
That's
right.
what we know.
I'm Carol Massar, along with Tim Stanley. Let's get to some stocks on the move this Wednesday. With us today at Bloomberg News, cross-asset reporter Denitsa Sikova with Stock Movers. Where do you want to begin?
I have one more decliner for you in case this doesn't work. We're going to start with SpaceX.
Oh, I love when you do this.
Shares are lower down today, and they're lower than this threshold we've been looking for weeks, the $135 mark. It's just slightly lower, but nevertheless, it's an important threshold. Of course, the ticker is SPSX. It's been a very, very volatile IPO.
Don't you feel like we could have
every
called
IPO.
this?
We could have called this.
Kind of is,
yeah,
right?
but it's always easy after, right?
Yeah, totally.
It surged nearly 50% in the first 3 days of trading, losing nearly a quarter of the value over the next 3 sessions. Obviously very volatile. A few interesting things we've been looking at. Passive flows. So SpaceX was added both to the Russell and the NASDAQ 100, and we've seen some of this boost from obviously passive funds buying up the shares. Bloomberg Intelligence says this is about $5.4 billion in buying from index funds. How long is this going to last? I guess most of this is done. So that's one pressure point. Of course, we're going to have the first quarter report. That's a massive pressure. People are worried. Is this massive spending on XAI and AI build out? What does it mean for cash flow? The numbers are coming.
Yeah.
There are some folks out there who argue that this, like other Elon Musk companies, is not necessarily trading on fundamentals currently. And when we
So the question is, will it ever? And also, will it ever have fundamentals that make it more reasonable in terms of its valuation? Will it be profitable, right? Will it make
Analysts
money?
are positive on it.
Yeah, if you look at Wall Street, we have an $800 price target from Raymond James, but overall 80% of analysts has a buy rating. Like, it's pretty optimistic. No one is ready to say sell. So, some pressure there.
So revenues forecasted, adjusted revenues of about $39 billion this year. And what's the market cap?
Over 2 trillion, right?
Yeah.
Yeah.
I think it's
Yeah.
surpassed.
Free cash flow, I mean, super negative.
1.7 with the declines, 1.7 trillion.
Yeah.
Excuse me, 1.8 trillion.
But still, it reached 2 trillion.
Yeah.
This is the predicament that is anything to do with Elon, right? Because if you think about what he did with Tesla, same story, right?
Exactly,
Everybody was questioning for a long time.
And that type of volatility is pretty common, and it comes and goes. And for those who dare to short some of those names, it's been a pretty painful time.
Are people shorting this one?
I don't think short interest is pretty high.
17%?
Yeah, that's actually high. That's higher than I thought.
Yeah, okay. All right, good one. BlackRock, I love this. This is a gainer today.
BlackRock, it's all about the fees, at least in my opinion. BlackRock is up today, having a pretty strong day. The ticker is BLK. So Larry Fink made this big bet to combine index funds that are low fee, passive, but obviously massive in assets with higher fee active ETFs in private markets, and that's paying off. Shares rose as much as 8.3% in earlier trading, now a little bit less. If we look at the assets under management,
This is amazing.
It's a crazy
but not
number.
a surprise.
I don't even know how many zeros to put there.
I know.
15 trillion, crossing 15 trillion for the first time. Of course, a lot of this is passive S&P flows, which is like in the trillions. But nevertheless, it's fascinating. BlackRock has been pushing into those active ETFs, in those private funds. And one important metric people are looking at, they reported 8% growth in organic base fees. And investors really care about that. It means that they can charge investors more for those massive funds. And maybe that's one reason we're seeing such a spike in the stock that didn't receive lots of love this year.
Speaking of spikes, just 20 seconds on PayPal.
PayPal obviously is working. We have reports with Goldman, Evercore, big acquisition may be coming. Stripe and Advent is looking big pop. Stock is up 17% today. We're yet to see what happens, but historic move.
Yeah. Definitely a big mover. Denitsa, thank you so much. Denitsa Sekova with Stock Movers. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere. Get your podcasts.
Coming up next on Bloomberg Business Week Daily, we're going all in on this extreme weather, from California heat to flash flooding in Texas, and what it all means for the grid. That's next.